Hey everybody, welcome to Pit Stops at Podium, the RevPartners podcast, where we talk to execs who have competed and won, taking their companies from high growth to high scale. My name is Brendan Tolleson. I'm the co-founder and CEO of RevPartners, and I'm delighted to have with me today Jon Ostenson for this episode of Pit Stops to Podium. Welcome, Jon.
Thanks for having me. Excited about our conversation and love the show.
Thank you. It's always fun on a personal level when I get to connect with fellow dads or moms that are part of my daughter's school community. So, Jon, this is a fun one for me. So thanks again for stopping by. Jon, before we get into kind of the meat of the presentation, would love for you to give our audience a little background of who you are and what you do today.
Yeah, absolutely. So based here in Atlanta, Georgia, as Brendan said, father of 3 young kids, active in the community. But my background was largely in the corporate world, like so many out there. I had a great run with Accenture and then Carter's, did the whole MBA checkbox way back when, and spent close to a decade with Carter's. Oshkosh Bagosh, got to be exposed to quite a few things, and given additional opportunity over time on the sales and marketing side. And it was hard to leave at the end of 10 years, but like so many, I had that desire to do something a little more entrepreneurial and in the private world. And so looked at a lot of different private equity firms and tried to figure out which portfolio companies were the best fit. And long story short, stumbled into franchising on the franchisor side with Shelf Genie franchise system. Had the opportunity to come in and serve as president, supporting all their daily operations and franchise owners across North America. And that really opened up my eyes to what I call the world of non-food franchising. It's an area that's oftentimes not on people's radars, but once you expose them to it, then it really gets the wheels turning and helps them think through opportunities. And so fast forward, I spun off from Shelf Genie with the founder. We built up another business in which we served franchises. It was called 10x5. We had close to 40 employees. We had a marketing agency and a call center and a technology team. And, it was a great model, except that it wasn't that profitable. So we were doing a couple million a year, but the profitability really wasn't what I thought it would be. I ultimately made the decision to wind it down and found homes for our people and for our clients, and pivoted over to what I'm doing now, which I absolutely love. And that's franchising. I get to serve on the consulting side, working with about 300 different brands across the US, a number of different industries. And I get to play matchmaker, helping people understand that world and then match up the right opportunities. In addition, I've got business partners and we own franchises as franchisees ourselves. So I've now sit on both sides of the franchise table and just love so many different dynamics around it.
Well, we may have to set up another podcast interview around transitioning from was it 10x5, is that right, to FRANBRIDGE? Because that's a whole different topic, which I'd be fascinated to learn how you make that exit and start this business. But before we get into our big idea, Jon, which you can imagine is for our audience is about franchising. But before we get into that, Jon, we do have a tradition here at Pit Stops at Podium, is to get to know our guests outside of work. So what are 3 fun facts that our audience should know about you?
Yeah, I think fun facts, when you have young kids, it all revolves around them. So, I coach my son's basketball team. My kids are 10, 5, and 3 are their ages. We've led small groups through our church in our home over the years. And so we stay active in the community. But no, going back, when I was with Accenture at the beginning of my career, kind of a fun fact, I spent about 6 months over in India, in Hyderabad, India, and just had a great experience that really opened up my eyes to a lot of different facets of highly politicized topics such as outsourcing. And I got to see both sides and form my own opinions, but just had a great experience and have not been back to spring break in India since then, but have a lot of respect for what's going on over there these days.
What's your favorite Indian dish?
Gosh, there's so many. I just love the naan bread and all the curries. And so love Indian food, trying to rally the family around me.
Yeah, we've started to get our kids to finally eat some butter chicken and tikka masala. So that's as far out as they can branch so far, but we're hoping that will plant some seeds for more spicy foods to come. Good for you.
That's a good way to go.
Well, Jon, I appreciate you sharing a little bit more about who you are. Let's transition to the big idea. We already kind of teased out a little bit in light of what FRANBRIDGE does. But let's kind of park on this topic, which is why start a company from scratch when you could own your own franchise? And I think this is a really interesting topic in light of our audience. We have aspiring sales and marketing leaders, and in light of your background, I think it's really relevant. So maybe kind of before we get into some of the big talking points, you mentioned in your introduction, you've been at Accenture, you've been at Carter's. What led you to think through that process, even from your own perspective?
Yeah, I think most people have a desire to be a business owner at some point in their career. It's something that's on the radar for most of them. However, you get the golden handcuffs. In the case of Carter's, we had stock vesting that was happening, and it was hard to walk away. However, you only live once, and I think you want to challenge yourself. However, there's so many risks, and you hear about the stats of how many tech firms actually make it, and those are the ones that get the headlines, but there's so many that don't. And so a lot of times people just don't know what that looks like. Starting a business, they're waiting for that great idea, and there are a lot of people with a lot of ideas. They're doing a lot of talking, but they don't actually take that step. And so what I've seen is just the successes that franchising can bring, and I'll start by saying franchising is not right for everyone. There are those, I'm a member of the Entrepreneurs Organization, and some of the EO members, are interested in franchises, and I have to tell them, no, you're too entrepreneurial. You wouldn't stay within the bounds. You think you're the smartest guy in the room. And then I have other EO members in that case that say, hey, I love the idea of not reinventing the wheel, but having something that I can step into on the side, maybe. So some of the benefits of franchising would definitely be, not to be too cliche, but you're starting on third base instead of first base. You have that proven model, the playbook, on the operations side and the marketing side. So you don't have to make the same mistakes that someone else may have made in building that business. You also have a coach on the sidelines. If you think about the franchisor that way, where the better you do, the better they do. So they're very vested in your success. And not all franchisors are created equal. I mean, that's part of our vetting process and choosing the brands that we represent. But you also have other franchisees around the country that are maybe testing marketing vehicles or trying new things that you could learn from. And so I've seen that play out as well. And there was an interesting study recently, because you also think about, when you own a business, you're cash flowing, you're building an asset. Obviously, you get the tax write-offs. These are benefits you don't have as a W-2 employee. But part of that is that exit. So you're building an asset that's going to have an exit value down the road. And, you may not see the same multiples that you see, some of the firms that you work with, Brendan, on the tech side. However, you can make a very healthy dime off of that. And the Riker School of Business did a study. They looked at over 2,000 companies that had exits over a 10-year period, and looked at similar industries to compare apples to apples, franchise versus non-franchise. And what they found is the franchise businesses actually traded at a 1.5 multiple of the non-franchised counterparts. And so it was really eye-opening to a lot of people to understand that benefit as well.
Yeah, I think that's a great data point, and this is really educational even for me. To your point of, if you have an entrepreneurial mindset, you want to become your own kind of an owner, as you mentioned. It's a way to somewhat de-risk that, where you have a proven asset with a proven playbook, proven process, proven market, et cetera. So long as you have the right mindset and right makeup, but it could be, a pretty compelling way to go. So let's dive in a little bit further. You had mentioned earlier, franchising is hot, especially in the non-food segment. So who is buying and why?
Yeah, we're seeing, first off, I'd say franchising is as hot as it's ever been. I think COVID's caused a lot of people to question the path they're on and say, maybe now's the time to take a step out. And, I want that sense of control. I want to build my own empire, not someone else's. So we're seeing overwhelming interest really across the country. But we're seeing those that want to keep their day job, or maybe they're existing business owners and they've got other companies that they're running, and they want to expand, their revenue streams. And so that could be a semi-absentee role, as we call it, or those that are looking to leave the corporate world, let's say, and jump full-time, what we would call an owner-operator model. So we see both fashions, and there are best practices around each one that I get into with my clients. But right now, from an investment standpoint, you've got stocks at an all-time high, interest rates historically low, only so many good real estate deals to be had. So outside of crypto and some other alternatives, where are you investing? And it's a real problem that a lot of people are facing. And many of them are wising up to the idea of having a side business as a diversion or diversifying play. And in some cases, it can even complement their current business. I'd say more than half of my clients are real estate investors as well. There are a lot of businesses that play very well within that sector. And what they're buying, Brendan, I talk about non-food because oftentimes when people think franchising, they think fast food. And what we see people gravitating to right now is, a lot of COVID resistant or essential services. So think of like the Serve Pros of the world, or roll off dumpsters, or home services, property services type businesses. We also see a lot of focus around health and wellness and the growing aging population. I can actually think through a couple of examples this week that we did placements on. I had a Wall Street attorney outside of Boston. He just bought a gutter business because the numbers on the business are insane. He never thought he'd be running that kind of business. He's doing it full time. I had a couple that works for the University of Arkansas. She's a PhD out in Fayetteville. They just bought a fitness business that caters to the older population. They're the only national brand that really does. I've got a client here in Atlanta that just bought a property management business. I had one that recently bought a business coaching franchise. And so there are a lot of different sectors once you really peel back the onion. We just did a 10-unit oil change deal a couple of weeks ago. But they had some uniques about it. So people love digging in. And I'd say over 80% of my clients end up in an industry with an idea that they never had on their radar to begin with.
Yeah, it's interesting what you're describing. You're right that most people will just think, at least I can only speak for myself, but that food is what you would typically think about with a franchise. And there's so much, it sounds like upfront from an awareness perspective, that once you make people aware of what's out there, it drives interest. And I think it's a good segue into our next topic, which is just the financials. So help our audience understand the financials. And so once they're aware that there are all these franchise opportunities, but I mean, there's got to be that compelling aspect of how do you make money out of this? And so what does that look like within the non-food segment?
Yeah. And so, of course, it varies by industry, but let's just take the gutter example. And I'd say that's a highly profitable franchise. It's probably one of the more profitable within its sector. But in that case, my client was purchasing 3 territories defined by population, all in an investment on this one because he doesn't have to have a physical location. He can work remote. He's got the trucks and equipment. His all in, he's between 200 and 250, I would say. 250,000 and per territory. So he'll launch with one territory, then expand to the second, then to the third. One territory on average across the US is yielding its owners 1.2 million in average revenue, top line, and 380 in bottom line EBITDA, or operating margin, if you will, cash flow. So, highly profitable, very scalable. There's potential to do roll-ups down the road as well. I'd say, and right now, private equity loves franchising. I get multiple calls a week from private equity firms looking to invest typically at the franchisor level, but they just love how it's such a repeatable process. You're using other people's money. You've got vested interest. Those local markets. There's just so many benefits around it. But the average deal size we do, I mean, it can't. Some are higher, some are lower, but I'd say 150 to 250 is kind of your all-in investment average. And some of these clients are funding it via, self-funding. Some are using their retirement accounts. We have some special programs that we can use that create tax benefits around that, as well as SBA loans continue to be very common.
So 150 to 250, I think is what you said in terms of the upfront. And then what's typical in terms of when you're talking to a prospective owner, when they should expect to see that money back? Like, what is that in terms of years, or what's the best way to be mindful of that? Yeah,
no, if it's a brick and mortar retail type establishment, let's say the oil changes, for instance, even though they use prefabricated buildings, it's a higher entry cost. In that case, it could be 9 months, 12 months, 15 months. I'd say most of our service-based franchises where you don't have at least a customer-facing built-out storefront, with a lot of those, some are cash flowing day one. I'd say most cash flowing within 6 months.
Wow.
I'm an investor in a franchise driveway and coating. It's a great little business. I've done 5 or 6 placements with them. And, the margins on this business are close to 40% EBITDA at the end of the day. And it's not day one, but you build up to that in a short amount of time. You start scaling it. And, when you think about that, that's 40% on revenue. However, when you look at your entry cost of what your investment was, that 40% could be north of 100%. You're getting multiple times your initial investment.
Well, EBITDA is somewhat of a foreign concept to a lot of technology companies. So for our audience, that may be a little bit of a crazy concept, but it's profitability is nice. And so, I think it's what you kind of outlined here to me, at least, is there's an opportunity. The barrier to entry is I wouldn't say it's impossible. It's pretty low, but there is a cost associated with it. There is a favorable return pretty quickly, which is exciting. Now, Jon, you obviously play a role in this space. So how do you help clients get selected for franchises?
Yeah. So, the great thing is it's entirely free to my clients. So there's no charge at all. I'm never selling. I'm sitting on their side of the table. We have vetted roughly 300 franchise brands we've chosen to represent. I'm affiliated with the largest brokerage in the US, the FCC. And so it gives me access to all these emerging brands and development groups across the country, which I love, just seeing all these new business models come to light. But the way I work with clients is very streamlined, get to know you, have you fill out some questionnaires and such. And then based on what you've shared with me, based on what I see resonating with others with similar backgrounds as yours around the country, I'm able to bring opportunities to you for evaluation, and we walk through those together, typically 5, 6, 7 opportunities available in your market that meet all of your criteria that we see some really positive upside with. And from there, I then hold my clients' hands through the process as we typically evaluate 2 to 3 in working with the franchisor. So entirely free. I get paid by the franchisors on the back end. So there's no charge at all to my clients. None of that gets passed on to them. But absolutely love what I do, getting to play matchmaker and do a lot of educating.
Yeah, I think you're a great follow on LinkedIn. You have some really good educational content for people who are trying to understand this space. And so what are some practical next steps, either for folks to understand more about what's going on in your segment, but also those that may be interested in getting involved in this space? What's the next step they should take?
Yeah, absolutely. No, certainly connect with me on LinkedIn. I do provide a good bit of information out there, but then go out to our website, FRANBRIDGEconsulting.com, and on the website, just share your name and email address, and I'll reach out to you. Would love to set up a 10 or 15 minute call initially, and we just bounce some ideas around and see if it makes sense to carry the conversation forward. But happy to share resources as well.
Well, Jon, thanks for stopping by. I love learning more about franchising. Candidly, this is a new area for me, but it's an opportunity that I think a lot of my audience will be interested in learning more about, just because of the reasons that you outlined. So those that are interested, Jon is the guy to reach out to. But thanks again, Jon, for stopping by.
Absolutely. Thanks for having me.
All right. Talk to you later.